The Hidden Life of Credit Cards, a cinematic masterclass on loans and credit. There's a moment, quiet, almost imperceptible, when your fingers brush the edge of your wallet. You're not thinking about it. You're in a store, a restaurant, maybe online at 2 a.m., chasing a dream or silencing a fear. You pull out a thin, gleaming rectangle, plastic, metal, a symbol. You swipe, you tap, and just like that, the machine hums, the screen flashes, and a world of unseen promises begins to unfold. We live in an era where money has become invisible. Pixels, data, digits on a screen. But behind every transaction is a story. Behind every credit card is a contract, not just with a bank, but with your future. Today we unravel that story, not with dry facts or robotic finance jargon, but with emotion, with honesty, with clarity. This is a deep dive, a cinematic masterclass into the soul of modern money. We're going to explore how credit cards work, not just from a technical angle, but from the inside out, from the heart, from the mind, from the lived experience. This is about power, about temptation, about opportunity, and about how to navigate the razor-thin line between freedom and financial quicksand. So buckle up, because this journey is going to change how you see the world in your wallet. Chapter 1, Credit, the Currency of Trust. Before there was plastic and code, there was a handshake, a promise, a favor returned. Credit is not born from money. It's born from trust. When a lender gives you credit, they're not just handing you funds. They're saying, I believe in your future self. I trust you'll keep your word. I trust you'll pay me back. Let that sink in. Because in a world that measures worth in digits, credit is one of the most powerful forces shaping your financial destiny. And at the heart of it all sits a tool millions use every day: the credit card. But how does this little card, this thing you barely think about, hold so much influence over your life, your decisions, your dreams? Chapter 2, The Birth of Plastic Power. Picture this: New York City, 1950. A man forgets his wallet at home before dining out. Embarrassed, he vows to create a solution. And the Diners Club card is born. What began as a convenience quickly evolved into a revolution. By the 70s and 80s, giants like Visa and MasterCard emerged, wrapping the world in a web of credit and consumption. But as the system grew, so did its complexity. Credit cards weren't just payment tools. They became psychological triggers, offering instant gratification, social proof, even identity. You weren't just spending. You were stepping into a system, one that watches, calculates, rewards, and penalizes you. Chapter 3, Behind the Swipe. The machinery of credit cards. So what actually happens when you swipe your card? Let's zoom in. Swipe, tap, insert. The transaction begins. Your card details are sent to the merchant's bank. Authorization. The merchant's bank reaches out to your card issuer. Do you have funds? Is your card valid? If yes, the transaction is approved. Settlement. Within a day or two, your card issuer pays the merchant. Now you owe the issuer. Billing cycle. Over the next 28 to 31 days, all your purchases are grouped into a statement. Grace period. Pay in full by the due date and you pay no interest. Carry a balance, interest charges kick in. Fast. It's not magic. It's math. It's mechanics. It's a system designed to profit, unless you know how to play the game. Chapter 4, The Illusion of the Limit. Every credit card comes with a limit, a ceiling. But here's the trap. The ceiling isn't based on what you should spend. It's based on what the bank thinks you might be able to repay. You get a $10,000 limit and feel rich. You feel empowered. But just because you can spend it doesn't mean you should. This is where many fall. Banks rely on the psychology of spending. They know you're more likely to swipe a card than hand over cash. They know you'll forget a $200 dinner faster when it's abstracted into a future payment. That's not a coincidence. That's design. And here's where it matters most. Credit utilization, how much of your available limit you use, directly impacts your credit score. Use more than 30%, your score could drop. Use under 10%, you're golden. Chapter 5, the cost of borrowing, compound interest, and the silent weight. Let's say you carry a $3,000 balance at 21% APR. You pay only the minimum each month. How long do you think it'll take to clear that debt? Over a decade. And you'll pay thousands in interest on money that maybe bought pizza, clothes, or gas years ago. Credit card interest is compound interest, meaning you're charged interest on your interest. It grows like mold in the dark, quietly, relentlessly. This is where things turn dark for many. A single emergency or poor decision spirals into months, even years, of financial stress. But knowledge is power, and power is control. Chapter 6, the rewards mirage. Earn cash back. Fly free. Get points on every purchase. Sounds amazing, right? But let's strip away the glitter. Rewards are marketing. Banks offer them because they work. They incentivize spending. They make you chase perks while potentially racking up debt. Yes, savvy users benefit. If you pay your balance in full, never miss a payment, and optimize every dollar, rewards cards can be valuable. But if you're carrying a balance to earn miles, you're trading dollars for dimes. Chapter 7, the credit score, your financial reputation. Think of your credit score as your financial report card. It tells lenders how trustworthy you are with money. Here's what matters. Payment history. Pay on time, every time. Utilization. Low usage shows discipline. Credit age. Older accounts boost your score. New credit. Too many inquiries raise red flags. Credit mix. A variety of credit types helps. Your score is more than a number. It affects your loans, interest rates, even job opportunities. Protect it like your future depends on it, because it does. Chapter 8, emotional debt, the hidden cost. Debt doesn't just sit on your statement, it sits on your chest. The anxiety, the regret, the sleepless nights, the dread of opening a bill. It's heavy, it's real, and it's more common than you think. But here's what you need to know. You are not your debt. You're not defined by your mistakes. Everyone stumbles. What defines you is your decision to rise. There are paths out: budgeting, counseling, negotiation, sacrifice. The road is hard, but it's walkable, and you don't have to walk it alone. Chapter 9, building power. Using credit cards the smart way. Here's your toolkit. Always pay your full balance if possible. Set up auto pay so you never miss a due date. Keep utilization under 30%, ideally under 10%. Don't cancel old cards without a reason. Age matters. Choose cards wisely based on your lifestyle. Track spending with apps or alerts. Treat every dollar borrowed like it's borrowed from a friend. Use the system. Don't let it use you. Chapter 10, when it all falls apart and how to rebuild. Sometimes you miss a payment. Sometimes life throws you curveballs. You lose a job. You get sick. You fall behind. It happens. What matters is what you do next. Call your credit card company. Many offer hardship plans. Prioritize essential payments. Don't hide from your statements. Face them. Seek professional help if needed. And most of all, forgive yourself. Your credit story isn't over. It's still being written. Conclusion: the card in your hand, a mirror of responsibility. Every time you hold that card, you're holding potential. Not just the power to spend, but the power to choose, to learn, to grow, to transform. Credit cards are not the villain, nor are they the hero. They're a reflection of your choices, your habits, your hopes. So choose wisely, spend intentionally, learn constantly. Because in the end, it's not about credit cards. It's about you. And you are capable. You are learning. You are evolving. Your story with credit is still unfolding. Make it a masterpiece,